And our next story is about Gautam Adani. Till last week, he was the world's fourth richest billionaire. Most of Adani's wealth was made during the COVID-19 pandemic, when the global and the Indian economy were in the grip of a slowdown. Questioning this story seemed almost impossible. Such is his story, such is the story we are talking about. And then came Hindenburg Research, a US-based short seller. Hindenburg said Adani pulled off the largest con in corporate history. It says Adani companies did a brazen stock manipulation, that Adani companies have made use of illegal shell companies in tax havens. They did this to manipulate the balance sheets, and this enabled the Adani group to siphon funds. By all means, these are not trivial charges. The opposition has called for a probe into Adani's dealings, and the onus is now on the Indian government. Fortune has this tendency of waxes and wanes. And who would know that better than Gautam Adani? The fallout of Hindenburg's allegations has been immense, and that is putting it mildly. Shares linked to Adani firms have lost around $65 billion in market cap. The Indian billionaire has lost $39 billion in personal worth. As one would expect, the Adani group has put on a brave face. It has rejected all the charges. It has threatened to sue Hindenburg Research. I'm quoting, "The report is neither independent nor objective nor well-researched." Meanwhile, the Adani Group has said its $2.5 billion FPO has been fully subscribed. What is an FPO? It stands for Follow-on Public Offering. Listed companies float FPOs to diversify their equity shareholdings. Adani Group wants to use the proceeds to fund its projects and pay off some of the debt. Adani says that FPO sales show that investors still back the group. The fate of the FPO had come under a big question. Some of Adani's shares also clawed back on bourses in a glimmer of hope for the beleaguered tycoon. Despite the success of its FPO sales, one cannot help but notice the response of the investors in the past. Public offerings have been oversubscribed by multiple times. In the case of Adani, it has been oversubscribed by just 1.3 times. And what's more, retail investors have stayed away from Adani's FPO. Let's now take a look at the exposure of the Indian entities to Adani companies. Adani companies owe around $9.7 billion to Indian banks. Both public and private sector banks are part of the list. The debt accounts for 0.5% of overall loans by Indian banks. Global brokerage firm Jefferies saying Adani's debt exposure is within manageable limits. But that has not stopped the opposition from raising tough questions. The Congress party has questioned the silence of the RBI. Its spokesperson, Jairam Ramesh, has termed Adani's defense as nonsense. Adani claimed that Hindenburg's charges are an attack on India. And despite the success of its FPO and some of the Adani company's shares bouncing back, one thing is certain: the dark clouds over the Adani empire are here to stay. The opposition seems to be in no mood to let them off the hook. The case of China's former real estate giant Evergrande Group also offering some comparisons. Evergrande survived years of short sellers' attacks, but it ultimately failed when Chinese regulators investigated the firm. Similarly, questions now remain on the Indian regulator, SEBI's next move. WION now available in your country. Download the app now. Get all the news on the move.